Okay, everybody, it's me, Gregory Mannarino. It is Sunday, March 14th, 2021, and this is my newest segment of Markets Look Ahead. People, this is a big week. Actually, I'm excited about it. I really am. Why? We're going to hear from the Federal Reserve this week, and whatever comes out of the mouth of Yellowstone is going to move the stock market one way or the other. Let's talk about what's going on here. I mean, it's no secret. It's everywhere. Everyone's talking about the bond market, the bond market, the bond market. It's something I've been talking about like since forever. Yeah. Again, it's the debt market or the bond market, which is the main driver of everything right now. It's a monster bubble. Monster. And the debt market bubble is inflating on a pace that we cannot possibly believe. The Federal Reserve's balance sheet just in the last year has gone up 100%. I want you to think about that. And they're not done. We just heard from the European Central Bank. They're going to buy more assets or more debt. The Federal Reserve, as we all know, and this is common knowledge, you can go to the Federal Reserve's website and look this up for yourself, is buying at least $120 billion per month. It's incredible, really. At least $120 billion per month of debt, mortgage-backed securities, assets. There's no cap. The Fed will follow suit. The market knows it. Now, let's back up to the last time Fed Chair Yellowstone, Powell, rocked the debt market. He raised the specter of inflation. Now, he knows better than anybody on the planet that the specter of inflation is kryptonite for the debt market, which will hit the stock market. Very simple. By him raising the specter of inflation, we watched the 10-year yield spike rather significantly. That put pressure on the market. Stocks sold off like 1,000 points in 2 days. And then what happened? They floated out former Fed Chair Janet Yellen, and she said, oh, no. Hold on a minute. I don't really see that happening, and the market loved it. Okay, then we got record high. That's the way it's going to play out. So this week, it's going to be more than interesting to see what comes out of the mouth of Powell. Is he going to once again raise the specter of inflation? Here's my take on it. The Federal Reserve desperately wants to institute yield curve control. This gives them more control, a bigger reason to create more cash out of thin air and buy everything. The stock market wants yield curve control. Understand, if the Federal Reserve institutes yield curve control, I'm not saying they're going to do it this week. They're just setting the groundwork. You understand? If the Fed institutes yield curve control, the stock market's going to go ballistic. It's going to go much, much higher. We'll get a multiples expansion cycle like you cannot believe. That's how it's going to play out. There's just no doubt about it. And it more than likely, at least in theory, should hit the dollar. The dollar should get weaker. Okay, that's also stock market positive. You understand? Okay. So the only question is, does Fed Chair Yellowstone or the Federal Reserve as a whole want to cause more turmoil in the debt market deliberately so they can institute yield curve control? Maybe. Okay, I think the Fed wants to create a little fear in this market. Okay, the market will sell off a little bit, which will be a buying opportunity, in my opinion, so they can institute yield curve control. So this week is going to be an interesting one. Let me put another perspective on this for you. The stock market right now is pricing in action by the Federal Reserve. The European banks just took action. They're increasing asset purchases. The Fed will follow suit. That's a guarantee. The only question is how the Federal Reserve is going to jawbone fear in this market. Are they going to allow the debt market to fall under pressure? 10-year yield goes higher. pressure on the stock market in order to institute yield curve control. In other words, give the illusion of a loss of control to issue control. You understand? It's all a game, and nothing that comes out of the mouth of a Fed president, any of them, or the Fed chair himself, is by accident. Every piece of it is scripted. The Fed chair realizes that by saying inflation is coming or an inflation spike, he knows it's going to hit the debt market. He knows it's going to hit the debt market. You'll get a sell-off. 10-year yield will spike. That will hit the stock market. Wall Street, please issue yield curve control. Yeah, that's what they're going to do. Wall Street wants yield curve control. The Fed wants yield curve control. The groundwork has already been set up here. And the only question is, what's going to come out of the mouth of Yellowstone this week? It's going to move the market. In my opinion, if he, again, raises the specter, stocks are going to get hit. If he doesn't raise the specter of inflation and just eases the market, that more easy money is coming, the market's going to hit record high, record high, record high, record high. You understand? So that's really where we stand right now. Okay, I think I covered that real quick. Let's talk about Bitcoin. Bitcoin broke over 60,000 this weekend. No surprise to you. Okay. Right now it pulled back to around 59,000 and change. I told all of you Bitcoin's going higher. It's going much higher, along with the other cryptocurrencies, as long as they don't regulate it. And I don't foresee that happening anytime soon. I really don't. Could I be wrong? Sure. I just don't see it right now. You know what all this means, people? If the Fed's going to continue to maintain their path of epic debt issuance, debt purchases, you got to take the opposite side of that trade. So I'm going to tell you again for the gazillion time, bet against this debt. Become your own central bank. Hold physical gold, physical silver, cryptocurrencies as well. Period. The end. The stock market literally seems like the gift that keeps on giving to me and my traders. It will maintain that. If in fact the market sells off this week because of the specter of inflation, which will be raised deliberately by the Fed chair, that is a buying opportunity in my view. And if in fact you are a subscriber to my free newsletter, link in the description of this video, hint, you will continue to get stock suggestions and plays in your email box. I hope you take advantage of this. I really, really do. All right, so in summary, big week, Fed week, and this market's going to move. The market's going to move one way or the other. Either it's going to present an extreme buying opportunity to us all, or we're just going to keep making money being long this market. Going to be interesting. I will keep you on top of it. Let's see where it goes. Again, we got it covered. What we just talked about here, we got it covered from every angle. Let them play their games, people. We will play ours. We can play it better because we know what they're going to do before they do it. You understand? All right. I'm out of here. Love you a lot. Please share the video. See you in the morning.